Thursday, July 18th, market analysis, Stan Ehrlich. Good morning. Well, I started talking about significant declines yesterday in the stock market indexes having started. We are now down 31 at the moment, not quite the low of the day in the E-mini. It has made new lows now for approximately 8 days, a week and a half. We hit our first support area at today's lows. Not that it got oversold, it didn't. It's still a neutral territory. But the support areas do provide good reasons for the market to bounce a little bit. And a little bit is a key phrase. A little hard to gauge, but maybe back up to 56.33 at the best. And it could happen today, and it could even make new lows for the trend down today. I do expect it to happen either today or tomorrow and continue to work lower. I have reached my first minor objective, 55.90-ish at today's lows, around today's lows. The next minor downside objective, which is a little bit more important, 55.03, let's call it 55 and a small number, is a series of lows that we had back at the end of June with some bearish engulfing sell signals that didn't work very well or at all. And if that is broken, which I do expect, maybe it'll take a week, maybe a little longer, but not too long. Then we're going to be coming down into the 55.30, 53.90, yep, 54.30, sorry, 54.30 to a little below 54 range, this green area here. And that's not necessarily going to stop this decline. I think is starting to be a move back into the October lows. 3 months. August, September, then October, finally a low in October. That's my opinion at the moment. E-mini 15-minute chart shows a nice big break here this morning, breaking into new lows for several days. And I'm thinking it's going to come down even more. I don't have that same support area drawn in right here, but that's it where my cursor is right now. Bounced right off of it. You can see a variety of lows in here and some highs in here. That's why I picked that as a support area, and it's worked past tense for a short period. Remember, it's very minor, not to be trusted for very long, and it's bouncing off of it okay at the moment. But this area here is much more profound, but still not the stopping point, in my opinion. It's going to be down here. Next, Spider, the grandfather here, did leave a gap behind yesterday, has now made new lows for a week and a half, just like the E-mini as you expect. The only difference between this and the E-mini is the hours of trading, and therefore frequently the high in the day are different. The closes are going to be very, very similar typically. So here we go. We're coming down, in my opinion, for maybe 3 months. Here's the S&P Spider 1-minute chart. Down she goes. QQQ. Now, I'll be concentrating a little bit more, probably in the next 3 months, maybe even longer than that, on the NASDAQ, the Qs, the NQ, because for quite a while now, they've been leading the way up, getting stronger, quicker, faster, holding better, and the reverse on the way down. And that's exactly what we're looking at. Today, we have already challenged the lowest lows, coming fairly close, not super, going back to June 24th, 3 weeks, not a week and a half, double that. And it's bouncing a little, but it's the same principle, same situation. The QQQ just doesn't have the bearish engulfing ER sell signal on the top of the market, which the NASDAQ does, the NQ, and I'll show you in a moment. So I'm bearish. The only exceptions are short-term rallies, closing gaps, coming back up to resistance, getting a little oversold, until finally I'm convinced, because of a variety of reasons, and I think it's going to be in October, that we finally have a significant bottom for months to come after that. Next, we got the QQQ 1 minute chart, and it's bouncing a little this morning for the last couple hours, an hour and a half, something like that. But same story. Now the NASDAQ NQ futures contract, the September futures, has a bearish engulfing ER sell signal, official sell signal on the top of the market. You saw it happen. I make these recordings every day for over 2 years now. You can go back and listen to my recording, excuse me, on the 11th of July. I don't remember if it happened before the recording was over or after. If it happened after my recording, then it's going to show up the next day, period. But if it happened during or before the recording, you'll see it on the chart. And this is what happened. Exactly what I wanted, including a retracement back up into approximately the middle of the range of the signal day, the red day. And we got short, showing you the short-term chart, 5 minute chart. We had a day trade scalp on the 11th of July, and we had an ER1 overnight trade that turned out to be a day trade. Not supposed to be originally, but this was so profitable so quickly that our trailing stop came down very quickly, and a rally punched us out of the trade with a nice profit. So ER1 scalp and overnight, both of those were profitable on the same day, July 11th. The next day, it comes back up into approximately the middle of the range, as I said before, hit the trigger on ER3, got short right there. For a scalp trade, it made money. Third profitable trade with the same signal. And ER3 overnight position, we are still holding. Pull this over to the left a little bit. Got a little bounce going for the moment. Maybe it'll come back up to about 20,000. There's a little resistance there. I'll erase that line. I really don't want to keep it there. Just a second. Done. And it had an alarm. That's okay. Goodbye. Also, there's a marker of some sort I was working on earlier. So that's my stop. Right. Is it about 2,000? Almost exactly, it looks like. And I turned my dumb cursor off. Sorry about that. I like the crosshair. There we go. Yeah, it's almost exactly 2,000, a little under. And if it rallies up there, I'll be stopped out with a heck of a good trade. Next, YM Dow Jones. Watch out, ladies and gentlemen. We may get another bearish red sell signal in the Dow today. Look how close we have already gotten to yesterday's lows. The prelude to this is the overbought yellow price action. You have to have that first, overbought or oversold, in order to get the bearish or bullish engulfing to turn red for sell signals or green for buy signals. If we get below yesterday's low, and we've come very close, bouncing a little at the moment, this will turn red. And tomorrow I will be squawking about a new bear sell signal in the Dow Jones. We had one here. Great. A buy signal on the bottom. Great. A sell signal on the top of the rally for a double top, which never panned out. Great. And then a sell signal that did not do well. It was a losing trade. But now we're set up. If it can only get below yesterday's low, then a new sell signal. And here we are. All the indexes are bouncing a little bit. But now the Dow is doing what the other markets are doing, sinking. For some reason, and I think it has a lot to do with interest rates, and I'm not a fundamentalist, sorry. So I'm not going to try to explain it. But I have some ideas in the back of my head. So I think this is a very good candidate for a brand new signal if it gets under yesterday's low by one tick or more. Bonds. The Russell Index now cooperating, doing about what the Dow Jones is doing, about catching up now what the NASDAQ has done started to do first, and the Spider is doing a little bit better. And now the Dow and the Russell are finally starting to come down. Very, very unusual that they would go up for so many days, so strong, while the other indexes were either going sideways, probably not, going down quite a bit, and yes, at the same time. Just really weird. Half a century in this business, I don't remember seeing that before. Next, Russell 5-minute, starting to come down, not too fast, not too quick, but it cannot have a bearish engulfing because we never did get above yesterday's high. The Dow Jones did. That's why we can have that signal. Dow bonds, no higher high, not overbought. Just simply bumped against resistance and starting to work its way lower. We're down 21 seconds today. At the moment, we got a little bit below yesterday's low. The high is right smack at the resistance level. Yesterday was a little bit inside it, but this could turn into a double top, which I doubt. If that's true, then the downside objective would be actually making a low, probably lower than the low of the trend for the last year or two or more. That's not going to happen. So where's it going? Maybe down to about 116. And I wouldn't be surprised if it bottomed out in this yellow support area or green support area at about 17.5 up to maybe about 18.5. So I'm not expecting too much of a dip. And I am expecting new highs for the trend, but I think it's going to take a while. Now, keeping in mind that I'm bearish for 3 months in the stock market indexes, I probably am not going to have a bull market go rip-roaring strong in the interest rate futures at the same time. More likely, they're going to be going sideways in some way, shape, or form until October, and then both of them are going to start to move higher, in my opinion. 10-year notes are just the same thing. A little resistance, almost overbought, not quite. It's going to pull back some. Next, crude. Support area held it 2 days ago. Nice rally, a little bit further. I'm voting for a little move up to about 83.5 to challenge the recent highs, and that could cause it to even go higher. Next, natural gas. Very oversold recently, still is oversold, but the key here is it's almost down to my objective, which I started talking about, I don't know, probably somewhere in the late June, a month ago. Bad buy signal, that lost a little money in a day trade loss. But the objective is now, for all practical purposes, has been fulfilled, not just exactly. Doji, oversold conditions, showing some signs of coming around and starting to flatten out or go up, could do the trick. After all, 95+% of my downside objective has been reached. So I'm trying to justify turning bullish, not quite yet. Heat, same story, bottom, support, oversold, starting to turn up a little. Maybe we're going to get caught between a rock and a hard spot. Modestly friendly to this symbol for a few days. Gold, very interesting. If you connect the high on April 12th and on May 20th, the high yesterday was smack dab on a slightly upward slanted line. You can call it a trend line. It's because it slants upwards, you could call it a bull trend line. But it's really a bullish resistance line because the market was trading underneath it. If it was trending lower, you could call it a bear trend line. And normally, when you say that, prices are trading underneath it by default, and they should stop when they hit the line and go back down. But this is a bullish resistance line, and it stopped it, and it's slipping. We were overbought, so it's no surprise how much lower can it go. Well, I can't rule out 2305 again. Next, silver and platinum. Pay attention. I started to talk about this in great detail yesterday. We broke out of a small head and shoulder top that is only about 2 weeks in formation. The first shoulder, July 5th, 1, 2, 3, 4 days later, a slight new high, higher high on July 11. 1, 2, 3, 4 days later, 3 and 4 days later, another high close to the one on the left on, what was that, July 4th? 5th, the last shoulder. In a single day, yesterday, finished the last shoulder, came down to the neckline on this very small pattern and broke below the neckline and a breakout. New low close and new lows for approximately 2 weeks. Plus, breakout. Now, this small formation has a minimum downside objective of 29.33, and we're already approximately halfway there. But all of what I just said created a last shoulder on a much larger head and shoulder top. The top is a little double top in itself, the middle of which is around May 24th, and the first shoulder is clearly April 12th. The bigger formation has a much bigger downside objective, 24. It could start the big formation breakout today or tomorrow, very soon, because the minimum downside objective on the small formation, which is the last shoulder on the big top, breaks the neckline. And that kicks in the big formation objective. So the little one is going to be the first domino that hits the second domino, which starts the whole big move down to 24, give or take a little. Platinum is the same thing, and oh my God, we're at the big neckline right now. We are at the breakout point on the platinum chart. It does have a small head and shoulder top in the last 2 to 3 weeks, very similar to silver. Bigger formation, very similar to silver. We did get a sell signal on the exact high day. Hooray! Now, how low can she go? 808. If we close below the yellow neckline, which we're sitting on right now, it wouldn't be too surprising to see it bounce for a day or two and then break the neckline, or it could happen right away. It just should happen very soon. But sometimes they bounce off it a little bit. After all, it's basically originally a bullish trend line if you didn't see the big pattern. Once you see the big pattern, now you call it a neckline instead of a bull trend line. But they're drawn the same kind of way, off of two lows. Now, watch silver and platinum. It's working. Yesterday's commentary starting to come true substantially. High-grade copper. Following suit, pattern's not the same. I wish I could justify this sell signal being the shoulder. That's the head of the formation. And way over here, timing-wise, much too far to the right, a last shoulder high. Now, yeah, the body parts are there, but the timing is way off. As a matter of fact, this little rally right here was about the right point in time. And when I say that, how many days or how many hours, whatever, from the shoulder to the highest high of the head, you're going to duplicate that to the right, which turns out to be about here. And that could usually be the last rally high, and down you go for the pattern. But that didn't work out. This one seems to be a little more relevant, but it's much too far to the right. I can't justify head and shoulder. All I can say is new lows for months. Support area might hold for a day or two. It might close below it. It's not quite, it's right there right now, low and last. And then down we go. How far? I think a minimum of 3.9. Next, I've got the soybeans. Another new low. You guys know I've been bearish now for a couple of weeks since this very important long-term major bearish breakout. Next, soybean oil. I'm not quite sure. This is given me a little problem for a while. We're between a rock and a hard spot. I need to close above the recent rally high of a few days ago, a week ago, or a downside breakout for months and months to get bearish. I'm not sure. Just let it go for today. Meal. kind of the same commentary, but I am expecting meal to go lower. The double top formation has not changed. We have made lower lows, and I'm getting pretty close to my minimum downside objective, which is, yeah, that's about level, about, what is that? 325, let's call it. Next, corn, almost another new low. Beans, corn, and wheat are doing the same thing. Very bearish, short term, intermediate term, and long term. Now, short term, I'm going to amend because we're oversold or just were oversold. So a little bounce and then hit the dust. Corn can bounce up to about 425, and I can't rule out 440. Next, wheat. Got oversold a couple days ago, bouncing a little bit or trying to, right now down 475. So a bounce might come back up to the resistance 555, and I will allow for, 580. Next, and then lower and lower. Cattle, the high today is exactly the same as yesterday's high, so no bearish engulfing, but we missed by one tick. I'm looking for cattle to come down to the support area. That would be 181 down to about 180.30. 180.30. We'll see after that. There's a chance that it could get a lot more bearish. Next, hogs. Miss Piggy got a fantastic sell signal on the top of a long-term bull move, buy signal on the bottom of a bear move. I did not get, unfortunately, a buy signal, just oversold on July 11. Yesterday's high came right up to a resistance area very, very accurately, and it's turned down a little. That could have been it. I will not be surprised because we got close to overbought, but not quite. If we continue to drop down, this is an intermediate to longer term bear market that I don't think is over. And Bitcoin. I'm going to keep my chart of Bitcoin on my YouTube for a while now because we have what appears to be a crazy 6-day island bottom. I've never heard of that, never seen one of those. They're usually only 1 or 2 days in length, maybe 3, but usually only 1 or 2. But this one seems to be 6. It qualifies, but it never happened before that I know of. Huge gap. We might come down, close the gap, and close the island bottom, therefore. But I don't know. I don't trade Bitcoin. I haven't followed it that closely. It's nice that we got a sell signal on top, and so far a buy signal on the bottom. You guys that trade Bitcoin, this system tends to do very well. I have to be friendly because of the green on the bottom. I'm looking for higher levels. Back to E-mini. We're bouncing a little. I don't think this bounce is going to go even all the way up to 56.30, but that's the best I can justify. 56.10 at the moment. I think it's going to turn around anywhere from here up to maybe 56.30 and make new lows, maybe yet today, if not tomorrow. Profitable trading to you.